Hey everybody, thought I would give you a little overview of the Stock Talk Weekly Insiders Phat Plan by me, Phat Infantry Trading. I produce this every Sunday evening for the Stock Talk Insiders Discord, and you can come in there and not only see the Phat Plan, but you'll also be able to get the alerts from it as well by me in the Discord. Starting off this week, obviously everybody knows we're in a bit of a stretch. That's been a little bit of a trouble, but I always post a review. I think it's good that you go through and make sure you review how the market is doing, not just based off of what you think over the week, but what we know at the end of the week. Because a lot of times during the week, we think one thing, we start to build up biases, and then you have to go back. And every Sunday night, I go back and reread this verbatim to ensure that I'm on the right track with the market. Don't want to be out of step with my thoughts versus the actual market. I will note that we're seeing some strength in the financial area. No area is truly breaking out right now other than gold and a couple of defensive plays, but overall, financials look like they're trying to make that attempt, and we'll see what happens further down. We'll investigate it a little bit. Technical and sentiment backdrop, and in the end, you can read that on your own. But as you know, the market is going down. But again, it's always good to focus in and frame it up. Events and earnings that are coming up. We've got a few earnings of note. We also have some jobless claims, some other things coming around, existing home sales. Again, just putting it all in one area. These are those things that you're supposed to track every weekend that you maybe you bookmark it during the week off of Twitter X, but you kind of forget to do it over the weekend, and then on Tuesday you remember. So I made myself a plan so that every week I would be in focus and in tune with the market. Market outlook short term, we added this in this week. Just an overall look at the market and what direction. We know the VIX remains above average, so swings in the VIX, not meaning swing trades, but swings in the VIX, a little bit of volatility still remains. It is below 30, so that's a good sign. And right now, the expectation is the Fed is likely to hold, but rate cut hopes do remain. We'll see how that plays out over time. What to watch? Volatility spikes, of course, watching the VIX. Keep your eyes on 10-year with TNX, and of course the Dixie for any spikes in the Dixie. It is at the bottom right now. It's just looking terrible, but you never know when those start to pop. I always set a few alerts in those areas. Sector rotations, defensive sector still strong. In the bottom line, you can read through that on your own, but swing traders, we got to remain nimble. Watch for those false breakouts, which is more often than not occurring in this type of bearish environment. So a lot of things are breaking out and fading all day long. And so right now as a swing trader, we're looking mostly for pullback buys only. Notable stocks, we have ADMA, LTH, RY, LRN, ULS, Rocket Lab, Cost, and Titan. I'll take you through those on the chart. Let me slide this over. And I'll take you through that on the chart. So here we have, first one is ADMA. So ADMA, we've got a nice $20 pullback right here, this key Livermore level. We want to see a fade, like most things that are breaking out right now, come back down into this $20 area and look to buy it right there. Bios are looking better. Look at that relative strength line. Look at that volume. Looking really good right there. We're looking for a pullback to that $20 area. LTH. So LTH, you can see we had an institutional accumulation. These are the David Ryan ants. And now we're looking for a little pullback right in here to this earnings VWAP that would be rising at that point off this 1020 area. So that's where we're looking for a pullback there. And then we have RY. Royal Bank of Canada, and so finance plays, as I've noted already, are looking better. Now we do have the 30-week moving average rolled over right here, but we have this nice area that price is tightening up and holding this 50-day moving average. So this is one we could buy through the high right here. You can see that area right here off of this right there starting to form. You see that? Key level. We have a key level here that is formed, and so we could play this one through the high of the day. The volume is not the best volume pattern, but the relative strength line, the fact that the financials are showing some positive movement, that one has me curious. LRN. So LRN is in a nice tight basing area right here off this cup, looking to break out. Right here off this 1020 cloud, right there that's forming. We'll zoom that in a little bit for you. Again, nice volume. It's looking nice and tight. Nice action through the tariff drop. One of the first ones to recover, really recovered firmly, that earnings VWAP right here. So again, right here off this level, right in that 134, 130 area off that 1020 cloud, you can see it keeps getting pushed back up. Just looks really healthy. Was learned ULS. We have ULS with an upside reversal, heavy volume day. Nice pivot level right here to clear. Prior pivot, a break through the high of the day, puts it through that prior pivot and on its way up. We have nice volume, nice relative strength. Again, these are pretty strong plays. We do have a cheap pivot here to break through right around that 57, 58 level, but there's plenty of room to it. Rocket Lab had some news last week about on-ramping the contract, so holding that 30-week moving average right here, and we've got a key level kind of developing right here, somewhere in this area right there that we need to get through, right there, right off of that 2027, somewhere off that $20 range, anywhere really, any buy off that $20 range. You've got some nice areas. You can see where I've been playing it quite a bit. You've got a nice area to manage risk right there, right off that $20 level. Anything around $20 is looking pretty good for Rocket Lab. You can see I've got alerts set all over this thing. So there's your $20 level play. Nice round number for Rocket Lab to manage risk. And then we have cost. So cost, clean and simple break. One of the best examples out there right now of a clean and simple break. Livermore level at 1,000. The higher the number, the more actionable they are. And so you can either short it off 1,000 or you can long it off 1,000. And right now, XLP is in a long-term uptrend. So, that's certainly a strong sector. So I'm not necessarily looking to short it. Looking for it to clear 1,000, pull back to 1,000 and hold, and then find entry there. TTAN is an IPO, which, IPOs struggle in these type of environments, and this one is not. It has gone straight up from the tariff downturn, ripped right back up to new highs, and is going to retest this little structure right here around 112. So we want to look. I've already set a line right here to put an alert on it right there. We're looking for a little pullback into this pivot right here off the initial days, and you can see if we get a further pullback, we'll look for the IPO VWAP to become support, or let it fall through, and then when it reclaims, we'll enter it there. So those are the notable stocks in the Phat Plan, and then we go further down, we have up in weekly volume. So EAT, SKWD, and Uber, they're all three looking powerful. Now, EAT and Uber did not technically qualify. When we say technically qualified, EAT is the only true qualifier. So we're looking for relative strength above 90 and accumulation A+ or higher. And EAT is the only one that has such. And it looks really strong. Looks like if we're going to see any sort of discretionary movement up, then EAT is ready to go, sort of a baseball underwater. You see the relative strength line, and versus the other XLY type plays, I mean, it's looking really good. Been holding up very well, again, off the tariff dip and how it held up. So this is one you can let reclaim that earnings VWAP, and then intraday take a retest of that earnings VWAP. Wonderful area to manage risk right here around 152 and on any reclaim of that earnings VWAP. Other one is SKWD, which I'm very interested in. SKWD is in the insurance finance area, and finances again are looking good. We broke the pivot. We want to see it hold. This was an easy one to set a hold here and set your stop loss just underneath that pivot level. Or if it fades back here to the 1020 EMA, we have this nice area off of 52.85. So this will be more dependent on how the market opens on Monday. Uber is just overall, it's one of those name stocks. It's got a lot of interest in it. We are heading into earnings, so I wouldn't be surprised if we see a little fade back here. There is some overhead, although not a lot, but I did include it because it has that name that everybody wants. So I'm watching it for a pullback, volume dry up, set up heading into earnings. We might be able to sneak in there a couple of days before it. A lot of times this is the type of stock that will rise into earnings with such a name on it right now. But we're just watching it for a setup. And then I put in here for you the Deep View Theme Tracker. As you can see on Friday, retail, unusually strong, pushed to the top. That hasn't been happening. If you look back, retail is a lot further down. Oilers, home construction, consumer staples, of course. So when you look at the weekly, they're still dominating the top, right? Or defensive plays. They're still dominating the top third of everything. Let's see here. Earnings for the week, I always put you a little plan in there for earnings, a little schedule, just so you kind of be aware. A lot of things happen. We know that right now on earnings this week, we're looking at guidance primarily from the big guys, big tech guys like Google, and we know that the rocket theme is strong, and we have a lot of rocket plays with earnings this week. So that will be something to keep a note on as it happens. And then last week, performance of the S&P 500. And then I always put you a little summary in there of what happened. Again, XLF, mostly green, so indicating a somewhat strong sector, again, from a relative strength perspective. You know, XLF used to dominate the S&P years ago, but it no longer does. But if you look at it, it's fairly green compared to the rest of anything other than defensive, right? So showing some signs of strength in XLF, and you can read the rest of those on your own. Again, I always post this in the a file in the Discord for everybody to look at it. Market breadth, right now it's still weak. You can look through this on your own, but overall what we want to see is a reclaim of the moving averages, and we don't have a reclaim yet. We are attempting to we're putting in higher lows from a breadth perspective. But, you know, we haven't put any higher highs yet, and we haven't reclaimed any key levels yet. I would say that right here, probably the New York is probably getting the closest to trying to make a reclaim here. You can see this key level. If we could push through it and hold it, it's trying to push through it right now. Could be some signs of some breath starting there, but probably more than likely a rejection at this time. Mid caps are lagging with breadth still weak. The recent uptick is minor relative to the prior decline. So it was a big drop, obviously. And then I put you a little breadth comparison table that you just kind of look at each time we posted to see comparison, see how we were this week to last week. And right now it's the breadth is weak. There's no doubt about it. And so we're having to sit on our hands. On the psych charts, MMTW, so stocks above their 20-day average. I have a little indicator that I developed called the Handy Dandy Indicator. And right now we're not what we call blue, which is fat momentum environment. And so I'm not on margin right now. I'll play during the day and hold very little overnight. I do have a few positions open right now like PLTR, but again, not a large position in my portfolio. Just waiting on it to turn. That purple is the 5-day in an uptrend, but we want to see the fat momentum line turn from this gray, this white shaded area to the blue. If it turns red, then we back off again. VIX, same thing. Now we want to see, of course, the VIX turn red. We did push below $30. We want to see a continuation back down really below 20 would be wonderful. NAM exposure, I think this is maybe the most interesting psych chart out there this weekend. Right now it's probably a lot of tweets about signals, potential bottoming. There are a lot of tweets about all that. But if we look at it as a bottom, as a process perspective, then, we've got a little work to do right here. So, but we'll take it, right? Better than none. And you can see the NAM exposure highlighted every time it was lower than where we are right now. And so just because of where we are right now, we could be going lower. You can see that right here. It doesn't mean that we're going back up. In fact, in both cases, in the bear market of 2022, and then this was in 2023, this is when we bottomed in October, it actually went lower when we got to this level. So this is not a sign of the bottom in terms of that. It is a sign of a bottoming process, is what I'm reading or interpreting from that graph. And right now it's popular to look at the NAM exposure, and everybody's forgetting about MMTW. SPY, I put you some analysis on SPY. It's not good right now. We're sort of bouncing up and down between these two levels right here around this 540, 520 area. That's what it looks like. We're getting pinned in between, which, wouldn't necessarily be a bad thing. It just, we don't want to go back below this low. So that's where we're at with SPY right now. And then important to note, the bounce is not yet being supported by buying interest because the CMF has been negative. Chalk and money flow has been negative. When you look back at it on the weekly, I mean, we're negative. We want to be above zero. SPY chart with the deep view market trend analysis. I always put that on there for you. I have the last couple of weeks trying it out. As you can see, we're red on the top, which this is the Sam Weinstein stage analysis, and it's red. And then the deep view market trend analysis is red. I put you a little key down there just so you can see it, and that's not good. Relative rotation graph perspective. So from here, I mean, you can see the defensives: XLP, XLU, XLRE, I mean XLV. They're all 4 technically leading these guys all that way. XLF could be a little dip buy forming. XLC, again, still a dip buy forming. This is the weekly relative rotation graph. XLK, I mean, that's terrible, right? That's Charles Barkley bad, just terrible. That's my impression of Charles Barkley. Looking at the relative rotation graph, we still clearly lean defensive. And then now let's look at offensive versus defensive charts. And when we look at this one, XLY versus XLP, and when we look at the equal weight, same thing. It's bad, right? We're going down, so this leans defensive. So discretionary, not doing too well. Growth value and defensive sectors. So we'll start with growth. This is versus SPY. And we had a little fake breakout, which again is typical of bear market conditions, right? We broke out through the descending trend line, and then we faded back below it by the end of the week. Same thing down here. We haven't even reached the trend line, and here we haven't reached trend line, although we are holding this area with XLC. Now that's Netflix in there, so Netflix holding up XLC right now. And some other communications plays too, your Verizons and whatnot, Team US, and those guys are holding up well too, considering. On the value plays, we lost the trend line and regained it with XLF. So again, financials kind of sticking out as interesting because that, those failed moves become fast moves, or whatever you want to call them. Failed moves then become fast moves in the other direction, or strong moves. It's a sign of strength. They flushed everybody out basically. Again, this is compared to SPY. And here we're trying to reclaim here on materials. This will be an interesting one to watch this week. We lost the trend line, but have since tried to regain it, similar to XLF. So are we seeing, strength in the value area come in? XLI is looking good right here for a move up. So that's space theme related as well. And then energy with a nice bounce right there. So this area, value area, not surprisingly, starting to look pretty good. Defensives. As noted last week, we had some dip buys and defensives. I didn't pick any up personally, but clearly their strength is there, right? I mean, it's moving into higher highs, and here we're attempting to move into a higher high with real estate. And regardless of whether you hate buying them, fact is the defensives are looking good. Wick play alert. We do have a wick play for next week. You can come to the Discord and see what those plays are, and get the rest of the report in the Discord. I wish you all the best of luck. And thank you for watching this video.